Hello. All right. Hello, everyone. This is me, Guillaume. I'm back from ETHDenver. So this is Stop Losing, Start Trading. Unfortunately, Rosalie is in transit. But overall, we've had a lot of fun. We'll still manage Rosalie's trades and look at the intern's portfolio. As the title of this live stream is, did he panic sold given the wild moves we've seen over the past week? And also, I'll share my thoughts about ETHDenver, about our event. Some of you may have been able to attend remotely. This was fun, but also the general feeling that people have had at ETHDenver. And yeah, I mean, I'm very excited. I got here over the weekend, and I did spend a lot of time there. I was happy to see everyone, especially our event. And maybe let me start with the portfolio, and then we'll do the ETH Denver takes later on. So let me see. But yeah, this is Stop Losing, Start Trading. We are typically going over Rosie's trade. We want to show the audience, everyone, how to trade options. There's a way to do this. You have to learn the basics. There's some mechanisms that you have to know so that you don't get wrecked the first time. We've been doing this for close to 2 months, and overall, it's been very successful in terms of teaching and also trades as well. We've got a very high success rate. We'll go over the current portfolio to see what it looks like, but overall, the goal is to me and Rosalie and everyone that's part of this be able to learn in a way that is a bit more direct and actionable. None of what we say is financial advice, of course, but this is just for a way to show and demonstrate how I think about trading, but also how you should think about it as well. I'm going to share my screen, and we'll go over some of the latest. Yes, there we go. About the latest moves in the market. This is the main page. Again, we can see the latest trades that have happened over the past few hours. Someone got liquidated, interesting. So I'm not sure if that's the price move or not. But what we'll do is that we'll go and maybe spy a little bit on the intern's portfolio and see how kind of well they've been trading over the past few days. If you remember, there was a huge drop, and maybe I'll share this as well, just so that people kind of see the magnitude. But the price of ETH has gone maybe like a yo-yo. It did move quite a bit over the last few days, but the environment we're in is that it did drop quite a bit over ETHDenver. It spiked again during the announcement that Trump sent about the strategic reserve. Now it seems to be going down again. And like everything in options, you want to position yourself where you're not in trouble for any price move. And if it does move too wildly, you want to also be in a place where it's not a minute by minute reaction that's necessary, but you have some time to react. So that if we go back to the leaderboard here, and I would spy on the intern account, we'll see what they had. If you joined us on Friday, we looked at the immediate aftermath of this huge price move. It was not too bad in terms of outcome, because if I look to the cash value, most of her positions made money. The ETH one was in negative, but now everything is back in the green. She's making good money, good return on her investment in the BTC ETH. I'll quickly go over this one. This was a bearish trade. Rosalie and the intern made a bet on the price of ETH going down faster than the price of Bitcoin, or Bitcoin increasing faster than ETH. But if you look at the price when we started, which was 0.028, now it's at 0.025. Directionally, she was right. She's earning 5% in fees, 17, almost 18% in return. So this is still in a good position. We don't have to touch it, but this is one trade that worked for us. So like many of these trades, No need to panic, no need to do anything. It's still working for us. We just have to wait and see. So BTC ETH ratio, Rosalie was right directionally. We did a ticker Bitcoin trade. I was at the Denver ticker Bitcoin event. Very, very fun. Happy to meet a lot of the community, the ticker Bitcoin community. I was happy to talk to people that did not know about options and Panoptic, but I was able to tell them about how we can trade options on ticker Bitcoin. A lot of folks were excited. I'll touch on that later. But this is another trade that was maybe delta neutral in nature. The starting price and the current price are very close together. And what we see is that the price keeps going up, meaning that this position is earning fees. And the more we wait and the more it's in range, the more fees we get. So that, again, ticker Bitcoin trade earned 5% in premia over the past 12 days. Pretty good. If you want to analyze this is kind of a good test, but it's very, very good return. Profit and loss, that does include that movement, is also close to 5%. So another trade that's working for us. What you'll see here is that as the more we wait, and this is kind of the point we want to be at, is that the break-even points go wider and wider. And then at some point, you want to be at a stage where the green bleeds out of that square, meaning that even if the price were to move outside of the range, this position would be earning a profit. And maybe now it's still in range. Maybe that would be the target for closing or redeploying. But for now, again, this trade worked perfectly. Nothing else to do besides waiting. So ticker Bitcoin, real Bitcoin trades are both successful. The one that we were a bit more worried about was the ETH USDC, which saw this huge price drop. We have two positions open. One of them is making $19. The one is looking $13. Turns out that even if the price did move quite wildly, 10-15% in a few days, this position doesn't see a lot of P&L change because it's delta neutral by construct. And when we do a quick overview, both of them have a delta, which is not 1 or 0, but it's a in the money delta, which is 81 and 79. I'll talk about this later. But both of those, in theory, aren't catastrophic. They are making some money so that there's a positive P&L. But let's look at the older one to get a bit more insight. And in that specific case, this is a straddle that was sold in the money when we started, exactly in the middle. Price went down again from not too long ago. 20 days ago, the price was 2,700. Now it's 2,200. And the price likely maybe left it, but it came back. And if we look at the premia, we'll see these high volatility periods that changes the pace at which this person is earning premium. But that position has been in range for the entirety of that period. It is earning 3% more than the position on Uniswap. It has collected 4% in premia, which is very, very good, again, in 24 days. And despite the price move, she's still in the green, about 1% up because of that streamia. And that position is one of those where, as long as it's in range, which is what we see here, and as long as she has one leg that is earning a bit more, in that case, one leg is earning 6% more than Uniswap, and it's still kind of in range, we could wait for a bit longer. And this is not a position that is too worrisome. It's, again, remember, it's a monthly option. This is 24 days. You may want to think about maybe managing this week. If the goal is to see a price reversal, we can wait a little bit. But at least since this is nearing the end of its period, maybe this week, Wednesday or Friday, we'll see what to do with them. But for now, it is actually a good trade. Nothing much more to do than just wait. The last one we want to look at is the other one in ETHUSDC. This one is losing money a little bit. It's another straddle that was meant to be built in at the money. We'll go to the details page. Again, the red is something we have to look at without saying it's worrisome. We just have to look at it. This one was created 16 days ago, and it was created as a delta neutral play. If you look at the shape, it's very, very flat when we started it, which is what was fine. But unfortunately, the price dropped. And that position is the one that we also talked about on Friday. It might need to be managed because there's one key aspect of it is it's a put and a call. It's not quite a straddle because the two strikes don't overlap, but rather it's a strangle. There's a distance between the put and the call. Unfortunately, the call side is out of range. The break-even point for that one was about 2,400. Now it's below. So you have half of your position not earning fees. And if I were to look at the premium, there is a change in volatility, so that the premium still accumulates linearly. But because you have half of your capital sitting idly, that might be one that is worth considering to close. It did earn $40 in terms of premium. It is losing a little bit in terms of the price movement, but the wash, 13%, $13 down on a position that is effectively controlling close to, I don't know, $1,300. So 1% loss is actually not too bad. And it might be one of those where we eat the loss and redeploy because of that one leg that's out of range. So as a advice for trader, for intern, it seems that they did not panic sell, but at least they did not listen to our advice on Friday. This one, given it has one leg out of range and the price is kind of getting lower in the other leg, might be worthwhile to eat that loss, go back to $13 down, but redeploy either in range or maybe if you think it's going to go up, there are other ways to do this. So that trade, which is maybe not working for us, let's go back to let's see how I would trade this, but I would close this altogether, eat that 1% loss. And if we want to be remaining delta neutral, I would go and sell another strangle, which is in the strategy tab. One key point is that you want to be closer to the money. You want to be maybe at a point where the strikes have some utilization to them, and you choose something that looks in the middle. One thing that you have to pay attention to is the V-guard or spread control is written here. One of the leg has 16% more return than Uniswap, which is great. There's not a lot of liquidity, so you have to kind of not maybe take this at face value. You could imagine that having this 15 or 16 or 17 bonus is helpful in terms of risk management. And if you want to be delta neutral, you would choose a strike that has a slightly higher V-guard. In that case, that would be the 2345. If that's your delta neutral view, you'll stay there. What I would personally do, I would maybe count on a bounce back. I think now that the price has gone down, and I don't know if there's any systemic issues, but I would say that I doubt the reserve will not include ETH. Even if it does, there's so much good things about ETH that is of substance. I would be a bit more bullish. In that specific case, I would perhaps sell the 2581, the 2500 strike, which has also a Vanguard. It has a little bit more positive deltas to recover. It is somewhat risk averse. The lower break-even point is 2000. The upper break-even point might be the upper range is about 3 to 300. So it's still kind of wide. It has a neutral to bullish view. You may want to see price going back to 2500, and that would be the best outcome. So if you are still a bit bullish, still a believer in in Ethereum, I would do one that is a bit more positive delta, which is what we see here. So yeah, so that's kind of the trade that I would do. I would not maybe enter into a new market still. I would just manage that position. What we talked about, sometimes you want to double down and capitalize on this high level of volatility. Because if you look at the current market conditions, price has moved quite wildly. The IV, and now I have to maybe look back to see if it's really that, but the IV is very, very high, 270%. I think that might be a glitch. But at the end of the day, what you have to look at is that volume is picking up. A lot of folks are buying, selling, doing whatever given the news, but liquidity on Uniswap hasn't really moved. And this is something that will come and visit time and time again. But that huge amount of liquidity in blue, which is in Uniswap, is not in range. And potentially, if that person wants to be back in range, he would have to sell or redeploy the liquidity. That is kind of this gamma doom loop that we have in mind. But volume is picking up, but then the actual amount of liquidity in range is kind of low. So that means that high volume, low liquidity, you have more volatility. So that specific pool, ETHUSDC 30 bips, has a very, very high amount of IV because of the fees collected, the amount of trades collected. We can look at the recent transactions, but a lot of folks have been trading as well quite a bit, and that will contribute to a bit more dynamic market. So the Uniswap, the Panoptic liquidity is also not quite all in range. There's some blocks here. You can buy this. You can actually remove and locate this to being in range if you're in Panoptic. And what we see is that a lot of folks have been kind of maybe minting or responding over the past 24 hours to these events. So I would say that the anyone that is considering entering, now would be a good time. You want to be able to capitalize on these moves. Could be even neutral or even bearish, but if there's a huge move and liquidity hasn't adjusted, you will see a higher return on investment in terms of fees. You will see a lot of liquidity. So again, back to this, a few days ago, this chunk of liquidity was all in range. It's helped stabilize the price. Currently, because it's out of range, we have a low amount of liquidity, again, about 100K. So again, 100K trade in USDC will move the price 0.3%. Anything above that will move it more. Whereas if you're here, it's going to be 200. Oh, yeah. So it's going to be about like $1 million worth of trade. So given the market conditions, there's a lot of markets, there's a lot of pools, a lot of coins, but even ETH USDC, 30 bips is very inefficient, very a good opportunity for sellers and traders so that you could be selling on that pool and being, again, putting the odds in your favor. So yeah, so that's a quick overview. I think the intern is doing well. Nothing to worry about. They are making money now. The pool is just that one position may need to be readjusted. And yeah, if you want to trade BTC or BTC USDC or ticker Bitcoin, meme coins, remember you all can do this on Panoptic as long as there's a Uniswap pool. If there's no Uniswap pool, you can still launch one and be able to trade options. So again, we're the Uniswap of options. We're trying to make it so that there's always a pool for you. And this is maybe going back to segueing into my thoughts about ETHDenver. So we had an event, a side event at ETHDenver called a Panopticon. And let me maybe share the tab. This was a very, very cool and interesting event. We saw, again, a lot of folks showed up, about 100, 120 people at the peak. This was a very, very rewarding and cool event to be part of because first we had a special guest, which was Tom Sosnoff. He's a legend in the world of trading. And we were able to interview him to say, what does he think about crypto and options and derivatives more broadly? What does the market need? Why can we kind of make crypto markets more efficient? So he had very, very good insights into it. I've asked him, he didn't know about impermanent loss, but I've asked him about a similar setup. What happens if the price moves in the wrong way and your calls are in the money or your LP position is out of range? Again, without going back to it, he said it's a high class problem. If you've made money, don't think about losses. If the net P&L is positive, then you're making money. So Tom, again, was very, he gets this question all the time. Again, a lot of beginning traders that sell covered calls are worried about losing because they see the price going through their strike. But yes, it's a high class problem. You've created a successful trade. You've made money. You should be happy. And folks that were there was Era Finance and Infinity Pools on the protocol side. We had XBTO and GSR on the Volmex as well on the protocol side. We had XBTO and GSR on the market making side. We had a very interesting panel. Very happy to see everyone going at it. And I think the my thoughts about ETHDenver kind of all reflected maybe in that panel is that we're kind of at a junction point where there's a lot of existing entrants, the OGs, maybe they are jaded and the new ones go maybe to other chains. But we've met a lot of institutional investors, folks from, again, these ETF launching teams, again, without naming all of them, but people are taking notice. And when you tell them about blockchain, they get it. When you tell them about Uniswap and swapping and lending, they also get it. It's very straightforward to understand how easy it is and how efficient it is to trade any token, to lend and borrow any token. And when we talk to them about options, kind of this missing pillar of finance, they also get it. Could be BlackRock, could be any banks. They see the use case for options in TradFi. Banks use them, companies use them. When we say, hey, we have a way to make the Uniswap of options on any assets, anyone can trade, they see immediately the appeal. So again, from a long-term adoption perspective, I'm extremely bullish, either Panoptic or options on the blockchain, because it allows all of the inefficiencies that are present to be kind of removed. And what we see is that if you want to trade options, there's always a need for a market maker. Part of the panel was also how we attract more liquidity. Do we cater to citadels and then the Optiver of the world that are extremely efficient but require some specific models? Or do we find new markets? Do we implement or re-implement finance in a way that is a bit more open and have new entrants into the arena? So that if Citadel wants to come in, maybe the blockchain is too slow for them, but there's other teams that are able to kind of take advantage of that either slowness or that new realm of doing of trading. So at the end of the day, even walking around in the on the main event, we were Uniswap and the Unichain team was kind enough to allow us to present Panoptic on the main event floor. A lot of folks came by. A lot of folks either didn't know about us and or that did know us. We were able to walk them through a trade, walk them through how do we actually trade on Panoptic. And a lot of folks are bullish as well, seeing the ease and how easy it is to mint a new option or trade options on Panoptic. So I came out of that event extremely bullish. I'd say that we're past the tech is getting a bit more mature. There's a lot of layer twos, a lot of different competing use cases and propositions, but the bigger shifts have happened, in my opinion. We have layer twos; these are live, and they have maybe 400, 500 millisecond time latencies. This is a lot of what people have been seeing over the past year. There's not going to be a huge change on that front. Maybe CK, maybe more parallelization is also another advance. But at the end of the day, the blockchain that it is, I don't think it's going to change that much in the way that we use it. Maybe UX will change. Maybe the speed or the way you sign transactions will change. But the value prop of decentralized open finance is working. It's set up. We have lending protocols like Aave and Compound, and more for order, all of those that have proven a clear use case. You have Uniswap and trading that have proven a clear use case. We're at least Panoptic in the app world. We're in the application development. It's maybe less sexy than trying to reinvent the underlying blockchain architecture, but is very important to have these apps that work. Could be Hyperliquid, could be Uniswap. These apps have put a lot of work into them to make them work seamlessly. We at Panoptic also are in that realm. We want to make the options trading as simple as kind of making a swap. We can innovate in a way that you cannot do in TradFi. We can actually create a totally new experience that you cannot see anywhere else. And then that's what the gut feeling of what people say when they see the interface. It's a new way of trading options. And the initial infrastructure maybe push of the past 2 or 3 years was maybe has peaked with Berachain, Monad, Mega ETH, all of these faster, better layer ones or maybe out layer twos being launched. The next step is product. How do we create something that is useful? Pump.fund had a lot of initial interest on the meme coin front, but if you want to talk about finance, if you want to talk about real applications, you need options, you need perps, you need futures, you need all of this to be well functioning. You need something to be liquid. So again, the way that we see Panoptic positioning themselves is to own that maybe options and risk management sphere of DeFi and finance. You can still lend and get yield. You can still swap. You can still do something that looks like static hedging, like a perp. But the strategic nature of options is definitely needed. One thing that Tom Sosnot said as well is that options there's a gray zone. It's not binary, black or white. It's not like a perp. It's where you get liquidated if you're wrong, but you have some forgiveness to it. That gray zone aspect is what funds and risk managers look for. There's some room to be wrong, and you can maneuver around it, which is what we saw even earlier with that position. But that's kind of the way we see Panoptic grow, the way that we see Panoptic capture a lot of that mindset. We can do, again, great trading, not black and white. We can do something that is unique, something that works, something that is extremely liquid and kind of scalable in the world of options, something that, again, has been quite difficult to do up to now on mainnet, but also on the layer twos. So I'll probably stop talking for now, but yeah, very, very happy to have been able to see a lot of folks at the event, at the main, at our Panopticon event, at the main floor as well. Again, we'll keep doing this. I think education and how we can transmit trade ideas, how we manage a portfolio is extremely important. And if we don't take the responsibility for it, no one will do it. So that's why we keep pushing on doing this. And yeah, over the next few weeks and months, be on the lookout for announcements, either a new chain that we go through, or a new product, or a new workflow. And maybe while we're at it, I'm going to do a sneak peek of what we have in the works. Is that we want to be able to migrate positions easily from Uniswap. So whether it's Uniswap v2 or v3, one thing that's missing is how can we convert existing LPs to Uniswap, to Panoptic. The key, maybe killer app, is that you can do this on leverage. Whenever you have a position to trade, you can trade. Oh, let me zoom out. You can trade it on leverage. You have a Uniswap position. You can replicate the same one-to-one to Panoptic, but you can choose to go maybe 1.25x leverage, 1.5x, or 2 or 3x leverage. Remember, it's all within the Panoptic ecosystem. You borrow in protocol, you deposit in Uniswap in protocol. We can do under collateralized lending. We can do leverage and margining on LP positions. So if someone comes in with an existing position that is between 2030 and 3200, something very kind of in the middle here, we can replicate that position one-to-one, but also add leverage to it. So that's kind of a workflow that is still in the work. We want to make it easy for anyone to migrate, but also kind of even LP directly using that aspect. So we are working on this. This is something that will come out maybe in a week or two, but overall, this is kind of the next step. But yeah, I'll stop sharing this. But yes, overall, thanks for everyone for joining. This went a bit longer, but at the end of the day, happy. I'm sure you got some out of the trade ideas. It's live on YouTube as well. You can watch them too. Feel free to join Discord or ask questions to me personally on Twitter. I'm always happy to answer questions. And yeah, I guess not financial advice what you heard. This is just financial entertainment. But I'll see you next on Wednesday for the next iteration of Stop Losing